Hello, everyone. Welcome to our last panel on Latin America. We are fortunate to have with us Francisco Jardim. He's a partner at SP Ventures, which is the largest agtech VC fund focused in Latin America. And he will share with us his view on the ecosystem and also some of the opportunities that the current environment are allowing to entrepreneurs. So, Francisco, all yours. You can share your screen.
Thank you very much, Alberto. I want to thank everybody for the honor of being here. I'm a big fan of this school and know a lot of brilliant Brazilians that have been here and who are reaching us in Brazil and Latin America. So, it's an incredible honor to be able to, share a little bit about our history and our view, especially of what's going on in tropical agriculture and the market. Okay?
Yeah, you're all set.
Fantastic. So I'm going to try to break our talk and leave plenty of time for a Q&A and discussions and hopefully make this as interactive as possible. I'm going to give you guys a little bit of my history and our history at the company so that you understand a little bit where we're coming from. Then I'm going to present a little bit of what the agribusiness industry in Latin America with a focus on the tropical environment is and represents, and then moving on to a couple cases and trying to dive into the opportunities in the region. So, I mean, we've been doing venture capital and ag tech specifically invested in Latin America for over 12 years now. We're one of the oldest, or I like to say one of the most experienced VC firms in the region. And one thing that's curious, when we started the company back in 2007, we were not focused on ag. We were generalist, early stage focused, and specifically concentrated on a geographic angle in the south of Brazil, which is where you have the most science and innovation in Brazil, okay? And we went out and we invested in 8 companies in the very first fund, and much to our surprise, 50% of that portfolio was ag tech. And it was in those early days, through market-driven insights, that we already identified that ag tech investing in Latin America is what we perceive to be the best financial return and purpose-driven investment and area of venture capital. We raised our second fund back in 2014. Larger fund. It was a little bit over $40 million. And we invested in 20 companies, 80% of those in the ag. And when we raised that second fund, it was already a ag tech oriented fund, the region's first ag tech fund. And since then, we haven't looked back and specialized more and more. So just giving an overview on Brazil, and remember, I'm going to give a lot of data using Brazil as the cornerstone, but when we talk about the greater LATAM agribusiness opportunity in Santa Cruz de la Sierra, in Bolivia, in Paraguay, moving to Colombia, Argentina, we can see a lot of this as being the extended LATAM tropical ag tech experience. I'm just focusing on Brazil in terms of numbers because it's easier to comprehend the data, okay? But it's a pretty great market. So agribusiness, not including financial services such as insurance and ag credit, but just the agribusiness value chain, it's big business for Brazilians. It represents 25%, almost a quarter of our GDP. And not only that, but it's by far the sector that we're most competitive on a global scale. I mean, we are the number 1 exporter of food in the world, agribusiness exporter, and we are the number 2 food producer. And we are on the rise, hopefully to overtake the United States as the largest food producer in the planet in the coming years. We are the leaders in many of the top cash crops in the world, such as soybean, such as sugar, such as ethanol, such as citrus and orange juice. We're a top player in most of the animal protein value chain, number 1 in beef and exports, number 1 in poultry, and a top 3 in pork and swine as well. Okay. When we look at Brazil, this is what's important to identify. Only 40 years ago, so as early as the late 70s, early 80s, Brazil was a net importer of food. And over the past few decades, we've really made a productivity surge that has transformed us into this global paradigms. And we've really become this powerhouse based on productivity. I mean, we've barely doubled the area destined for agriculture since the late 80s, and we've increased almost fourfold our food production. So it's really been productivity driven, producing more food per hectare with fewer inputs. And this consisted of what many people call the miracle of the Cerrado, which was through local innovation and local science, we were able to transform the Brazilian Cerrado, savanna, into a major breadbasket with major breakthroughs such as the tropicalization of soybean. And one thing that I always tell investors, and over the past few years, this has started to resonate more and more. And now during COVID, this has become a very important aspect. And I was actually talking to a fellow peer global ag tech investor, and he agreed with what I'm about to say, which is the resilient aspect of ag tech as an asset class, which was always snubbed by many venture investors as being a little bit too slow and it's defensive. But the resilient aspect of asset class ag tech has become much more valuable and important over the last couple days and months as COVID has taken place and people have become more risk averse. So what do I try to show here? In 2015 and 2016, previous to COVID, we had in Brazil our worst economic depression in a generation. GDP shrank by more than 7% over a 2-year process. And what's interesting to see is the agribusiness value chain continued to prosper and perform even in those years. And if we stand aside from Brazil and we look at, for example, Argentina, there has been a lot of volatility in Argentina from a political and economic perspective over the past 5 to 10 years. But if you look at agribusiness has also been solid. And the reasons are very well known to everybody. The industry does not depend on the domestic market for consumption. It's a very export oriented. So even when the domestic market slumps, the industry does not suffer that much. Second, it's an industry that has its underlying product is dollar denominated. So when the local exchange rates fluctuate and many times go down the drain due to local economic and political problems, farmers' revenues in local currencies actually have a major boom because the dollar appreciates and they have a larger sentiment of wealth. And last but not least, but perhaps just as important, the agribusiness groups in the region have been able to form very strong advocacy associations and consequently protect themselves from local political interference in their industry. So when we talk about tropical ag tech as a thriving ecosystem, we just had a great panel on Asia. But basically, there are 3 major regions in the world. There's Latin America, the center that I mentioned, going all the way to Central America and down to the north of Argentina. There is Sub-Saharan Africa, and there's Southeast Asia. Southeast Asia, we've gotten a lot of information. So we tend to target very much on what is the agribusiness powerhouse market of Latin America right now, which we just gave some of the numbers of the heart, but also what we have been seeing, which is a core interest of many different investors in strategic and financial, is that many of the innovations that we are developing and launching and scaling in Latin America right now through startups are probably going to be the major levers of ag innovation and ag productivity in sub-Saharan Africa over the coming years due to our commonality in terms of being tropical ecosystems. So we can think of a larger consumer market many, many years down the line in sub-Saharan Africa as well. And when we look at the 4 or 5 largest food producing regions in the world, Europe, Canada, United States, and the heart of Brazil and Latin America, there are a few things that are very different in Latin America and tropical agriculture. And these characteristics that make it different have created a barrier to entry from ag techs or for ag techs from other places. So we have seen over the past few years many very solid ag tech companies from the United States, from Israel, and other ecosystems try to make a launch and try to scale in Brazil. And they've suffered. they've had very difficult challenges in terms of product market fit and getting their scalability adequate in the region. And the reason is it's a very different agriculture. I mean, if you have a product that was focused to work in Europe, Mediterranean, or in Ohio, Illinois, chances are you're going to have to spend a lot of time getting the code rewritten, calibrated, and the business model restructured, besides having the pricing strategy on target. And it's difficult. And the reasons are, the region has 2 to 3 harvests a year, contrary for temperate agriculture, which tends to have one. We have completely different biodiversity, meaning different crops, but also different pests, different diseases. We don't have a cold winter that freezes biological activity over, so biological activity continues throughout the year, meaning that all the algorithms have to be readapted. If you're talking about forecasting and predicting plant growth, forecasting and predicting pest and disease growth, and crop care and crop control, we have very different soil characteristics. We have different microclimates. It's a completely different ballgame. We have a very different infrastructure. Farm sizes are radically different. We have much larger scale in terms of farm sizes. We have a different human capital working those farms, ready to adopt and disseminate technologies. Different infrastructure. Connectivity is much tougher in our region. The logistics to get produce out and into consuming sectors and into ports is also very different. So everything has to be reshaped and rethought. And what we've noticed is that ag tech firms that develop their technology and their product for markets focused abroad have a very difficult time coming locally. And what we've always bet is that native entrepreneurs developing native solutions for native problems will have a huge competitive edge over foreigners. And this has proven to be true in many cases. And because of this diversity, what the region has done, and this is valid for Argentina, for Brazil, and for several other ecosystems in the region, is we've had to build our own innovation ecosystem. This is going since the 70s with the Embrapa complex all the way to some of the leading universities in the world and the only leading agronomical universities focused on tropical agriculture. We've also built out a homegrown biological industry, which has actually got a lot of competitive edge over the past 45 days against the traditional chemical industry, since the chemical industry is dollar denominated and most of the local currencies have appreciated or depreciated against the dollars quite a lot. So some of the chemical input guys are really suffering to compete with the local biological when we talk about biological pest control. So when we look at the ecosystem, I can bravely say, and I've been going to Israel for the past few years. I've been going to the InfoAg in St. Louis. I've been going to the World Agri-Tech Forum in San Francisco. We've been traveling a lot to see what's going on in AgTech across the world. And I can tell you, Brazil has today the most decentralized and the most scaled AgTech movement in the world. I mean, we must have 5 major AgTech hubs, each one deeply connected with the region's agribusiness and growers and farmers and leading universities. And financial capital has started to flow towards the region, towards the company specifically, and we've seen adoption happening. So, I mean, it's really started to build out as a local market. And within this local market, we've seen several geographies really start to appear. But we tend to focus, and we have an office here in Piracicaba. This is a city that's about 2.5 hours away from São Paulo. For those of you guys that don't know São Paulo is the financial services capital of Latin America. It's home to most of the innovation spending in Latin America. It's got one of the biggest infrastructures in Latin America. We have the biggest port in Latin America, the best highways. So it's really one of the most densely investable regions in Latin America. And just about 2 hours out of the city is home to the University of São Paulo, ESALC, which is one of the top 5 leading agronomical science universities in the world, together with UC Davis and these other guys. And what has happened over the past 10 years, and we made our first venture investment in an AgTech company in this ecosystem exactly 11 years ago, is the region has really sprouted. I mean, we've been seeing accelerators. We co-founded an accelerator with the largest sugarcane and ethanol player in the world. about a year ago, or I'm sorry, 2.5 years ago. We've seen other ag tech accelerators focus and sprouting. We've seen a lot of large companies in the ag building out innovation centers over there. We've seen a lot of ag tech startup activity, and we've seen investors flocking over there as well. And top growers in the region setting up offices to be close to these science centers. So we've really seen a complete innovation ecosystem starting to sprout in the city, but several other cities in the country have also started to come close. And what we've noticed is that as the years have progressed, what used to be a lot of innovation and startup activity focused in technologies and entrepreneurship inside the farming area, solving soil fertility issues, crop care and crop monitoring issues, and seeding and planting, and very focused on the farmer. What we've seen over the past 2 or 3 years, and especially over the last 24 months, is a lot of startup activity solving the inefficiencies that the region has had outside the farm, meaning fintech for ag has been a huge source of deal flow over the past 18 months for us. We've seen a lot of e-commerce activity for ag. We've seen logistics tech for ag, and several other pain points being attacked by different startups. And remember, what we're talking about is really leapfrogging and building a financial services industry for agriculture in what is today the second largest food producing country in the world. So, I mean, there's really a lot of potential for value creation at the same time that you don't necessarily destruct value for traditional financial services industries because they simply were not there. Now, interesting to point out here, with COVID, and this was discussed in the previous panel, with COVID, several tendencies have been extraordinarily accelerated. So as governments are having to reach deep inside their pockets to bail out several industries that are suffering tremendously and several of the most vulnerable bases of the pyramid of the population, what happens is the subsidized credit that was available for farming is simply drying out. And farmers are starting to have to seek more and more alternative sources of credit and alternative sources of insurance to go along with that credit. And this is when we start to notice that simultaneously, the regulatory hurdles behind ag credit in the region, which were strong with notaries that have to get your credit stamped for it to be valid in courts, as the notaries are closed, as the bank agencies are closed, young startups in the region are having a boom to be able to work in their own terrain without the competition and without the opposition of these guys. This is the way we see the ecosystem in terms of investing. So we map out the region into 6 broad categories. We segregate the region between the vegetable and the grain vertical, between the animal protein vertical. We break it up into what technology is being leveraged to scale the company, if it's biotech, life science, or whether it's digital. And we break it up into where the activity is taking place, if it's happening inside the farm or downstream and midstream. And what you guys can see is we also map up with all the different technologies and trends that we're seeing, and we're seeing pretty much a lot of activity across the board. And this scale has really come over the past 24 months. We're really seeing entrepreneurs tackling all these major hurdles. Now I'd like to just go over one of the big bets that we're making here in the region. So one of the things that we've been looking to the US and seeing companies like Farmers Business Network, seeing companies like AgVent and many of these other guys trying to solve the e-commerce and the digital distribution and the disintermediation of ag as one of the final frontiers that still have not been disintermediated. We've been seeking someone in Latin America that could really lead this charge. We found a team of brilliant endeavor entrepreneurs in Rosario in Argentina, and they were building a marketplace which was already working and had a good product market fit in Argentina, a horizontal marketplace with financial services, with inputs, with land, and with a broad coalition of categories. We back these guys with a very broad coalition of investors. So there's Silicon Valley investors. We have our friends from Acre VC and from Fall Line Capital out of California, but also a really broad coalition of corporate venture investors, right? Guys like Bunge Ventures, Syngenta Ventures, some very big agribusiness venture capital investors in the region, such as Cresud and L'Arterigoyen, and we've really been able to get this kind of traction. And this is the kind of company that we're seeing you emerge from the region, companies that are really producing local innovation on a scale of a market that is simply not very available in other areas of the local economy. We're really looking to build native billion-dollar companies. So for guys who haven't really looked at LATAM tech innovation, the biggest unicorn in Latin America has ever produced also comes from Argentina, which is something that as a Brazilian, it kind of hurts my heart, but I have to admit, it's a company called Mercado Libre, which is a $30 billion plus marketplace. So that's the equivalent to eBay or Amazon of the region. And when we look at companies like Agrify doing a lot of local innovation in very local ways, we start to see that these are guys who are going to disrupt not only the way ag inputs and finished goods are traded, but also the way they're financed and the way experienced. And of course, these numbers were pre-COVID. What we've noticed over the past 45, 50 days, looking at the company's numbers, we've really seen scale accelerate. The region had, giving you guys a high-level number, almost $1 billion in equipment sales in one fair, in the region's largest fair in 2018, which is the Agri Show based out of Ribeirão Preto. The Agri Show, together with all the other live fairs, have been canceled. So all of these products that were bought and sold, all of these customer experiences, these all are having to somehow take place with a non-physical way. And of course, what we see is digital as the major solution. And I mean, this is one alternative, but we're also looking at many other e-commerce operations, such as live cattle, among others, and finance as well, fintech companies as well. So we're seeing a lot of tendencies in the region being accelerated by ag. When we're looking at ag, we're seeing winners and losers of COVID. Not everybody is a winner. We're seeing companies like sugarcane and ethanol suffering a lot with low petrol prices. But at the same time, we're seeing the bulk of the food producing sector of agribusiness being quite successful, as we mentioned in the beginning, with farmer revenues in local currencies being very high, export markets still answering, and we still have not seen disruptions in the food industry in the region, contrary to what we've seen in North America in some cases, such as the Smithfield factory, and what we've heard from the Tyson and Cargill CEOs over the past week. So it's been very resilient. And this is the kind of company we want to build. We want to build a pan-regional company going from Argentina all the way to Mexico in terms of consolidation in a very quick period. But we're seeing local entrepreneurs start to look at using Latin America as a platform to be able to launch and conquer markets like the United States. And we really do believe that this is the kind of thing we'll be seeing. So we're seeing Latin America as an export platform for innovation, not only to conquer mature markets such as North America, but also to be able to scale and help Africa become a major agribusiness powerhouse due to our similarity in terms of tropical agriculture. This is a very brief summary that I wanted to leave you guys with and open up for questions.
Thank you very much, Francisco. Very interesting, your view of the whole ecosystem in Latin America. So we have around 5 minutes, and I would like to start with a question regarding what's the entrepreneur profile that usually try to raise money and try to grow his business in Latin America? Is it somewhat older, or we also look like younger entrepreneurs like in the US? If you can give us some color about that.
Yeah, so we've backed entrepreneurs from their early 20s to their late 40s. I mean, we've had a very broad base in the region. What I can tell you is when you look outside ag, there's a very typical profile that we've seen most of the generalist venture capital firms backing in fintech. And I know most of these guys were a lot of entrepreneurs that had gotten their MBA in top schools in the US and came back to start a company. And this was the profile. In ag, it's been different. For example, in our portfolio, we have over 25% of our portfolio is women-founded CEOs. So we have a lot of women entrepreneurs in ag because the scientific courses that sponsor ag in the ag innovation cycle in the region are very women-intensive. Agronomy, biology, meteorology. So we've had the luck of being able to tap into this incredible talent source of women entrepreneurs of the region. We've also been backing a lot of entrepreneurs that come from the countryside. So this is actually a major opportunity because they're going to these top universities in agronomy, which are in the countryside. They're close to the farming ecosystem. They come very well connected in understanding the deep-rooted pain points of farmers. But at the same time, these guys, they tend to be a little bit less sophisticated in some other ways. For example, English skills tend to be an issue in many of our ag tech entrepreneurs, which thus makes it a challenge on how they can raise capital with foreign investors, because the language ends up being a much larger barrier than most of us think when they go to fundraising for their Series B and Series C and Series D rounds. But this is the different profile.
And in terms of traction with customers, when you compare entrepreneurs in the region, do they usually need to be like more advanced than what we see in other parts? What's your view there?
That's a very, very good question. And what I can tell you is, and this is what I think throws a lot of the North American and other investors that want to do ag tech in the region. It throws them off because they tend to look at what happens in digital in the US, and they try to replicate the learnings and the mindset to the region, right? So, for example, I've spoken to a lot of VC investors in North America that have a very strong prejudice against digital technologies for ag. They think the economics simply are very difficult to make them work, right? And perhaps that's true in North America, but what we're seeing, and I'll use one of our portfolio companies, Aegro. It's an FMS, a farmer management system platform. It's the leader in the Brazilian market. It's a company that grows 10% a month. And any of these metrics. So, I mean, when we look at the region, since the farm size is completely different, and the economics are completely different, you really have to have a local mindset into making your unit economics accounts to see how scalable these businesses are. Now, that said, I think that if you look over the past 24 months, what we've noticed across the board in our portfolio companies is that there has been a revolution in the digital market by COVID. So, I mean, until 2, 3, 4 years ago, when we spoke to the leading multinationals, they said, well, ag tech is never going to take off because for you to enter into Latin America and Brazil and Argentina, you need to have field sales guys. You need to drive 600 kilometers out, sit in the farm, have coffee, and sell technology looking eye to eye. And we always said, well, this wasn't true in any other industry. Why won't farmers eventually convert to digital and inside? Why are farmers always going to want to receive agronomists and do these things? And what we noticed over the past 24 months is that the digital revolution of sales, which was critical to bring scale and to distribution and to get the unit economics down to make digital transformation of farming really not only viable but very profitable from an investor perspective, took place. And it's really going. And we're seeing this in drone as a service. We're seeing this in this farm management company, Aegro. It's across the board. Mariana from AgroSmart that was here earlier, she's also got inside sales and a digital marketing platform that is working at very healthy unit economics. So, I mean, we're seeing it across the board, and of course, not only our portfolio companies, but as well.
Perfect. All right, Francisco. Well, thank you very much for giving us this opportunity to have you here and show what you are doing in the region. I hope you in the coming years also think about Chile, Peru, Mexico, other type of crops, but a lot of opportunities over there as well. So with that, we will move to the next panel. Thank you very much.
Thank you, gentlemen. My pleasure.
Bye.
Bye-bye.